Welcome to the Deep Dive, the show engineered to cut through the noise and deliver the crucial insights you need.
Glad to be here.
So today, September 18th, 2025, we're diving headfirst into something pretty interesting, actually. A real market anomaly.
Yeah. What's grabbing your attention?
Well, the broader tech sector is feeling some real headwinds after the Federal Reserve's latest move yesterday. But one specific quantum computing company, Rigetti Computing, ticker RGTI, is absolutely soaring. I mean, hitting an all-time high today.
Ah, Rigetti. Yeah, that is interesting. Quite the contrast.
Exactly. It's this fascinating contradiction. So our mission today is pretty clear. We need to unpack this. What exactly is driving Rigetti against the grain? Why is RGTI soaring today?
It's a compelling puzzle, definitely. And you've really hit on the core of our deep dive. We should probably start by setting the wider economic stage. Look at those macro shifts first.
Makes sense. Context is key.
Right. Then we'll zoom right in on the specific catalysts, the things really fueling Rigetti's performance. But as always, we'll need to bring in some crucial nuances too, potential headwinds you'll want to keep in mind.
Good. We need the full picture.
Absolutely. We'll explore the immediate trigger for this surge, put it in context within the whole quantum industry, and maybe touch on what it might mean for investors in this, well, let's face it, highly speculative sector.
But potentially transformative.
Oh, absolutely. Transformative is the key word there. Okay, so to really get why Rigetti's flying high today, we kind of have to start with the backdrop, the broader market turbulence.
Right. So yesterday, September 17th, the Fed made its move.
A rate cut, right?
That's it, a 25 basis point cut. Pretty significant. It brings the benchmark rate down to a target range of 4.00% to 4.25%.
And Fed Chair Jerome Powell, he called it a risk management cut. What was the thinking there?
Yeah, his reasoning was basically to bolster a weakening labor market, sort of a preemptive move trying to manage risk, as he put it. Okay, so a rate cut. You'd think, on the surface, that's good news for growth stocks, especially tech, right? Lower borrowing costs and all that.
You would think so. But this is where the market's reaction gets, well, complicated and really interesting.
How so?
The response was definitely mixed. I mean, you saw the Dow Jones Industrial Average actually surge, hit a new record high, in fact.
Wow, okay. So some parts of the market loved it.
Exactly. Your traditional value stocks, cyclicals, industrials like Caterpillar, big financials like JP Morgan Chase, they all benefited. These sectors often do well when borrowing costs ease up a bit and people feel the economy's got some support.
But not tech.
But not tech, generally speaking, and that's the fascinating part, the real divergence here.
Yeah.
The NASDAQ Composite, the S&P 500 tech indices, they actually slipped or gave back some of their earlier gains.
That is fascinating. So why the split? If rates are coming down, why would tech stumble? What was the catch?
The catch was in the details, in the forward guidance. The market basically interpreted it as a hawkish cut.
Hawkish cut. Sounds like an oxymoron.
It kind of is. They cut rates now, but the Fed's signals about the future were less accommodating than the tech sector was hoping for.
Ah, okay. What did they signal?
They indicated fewer rate cuts coming down the pike for 2026. And they also maintained fairly persistent inflation forecasts. They're projecting PCE, that's personal consumption expenditures, at 3.0% for the end of 2025.
Right, and tech valuations are super sensitive to that stuff.
Exactly. For these growth-oriented tech stocks, their big valuations often rely on earnings expected way out in the future. When you have sticky inflation and the prospect of higher rates for longer, or at least fewer cuts,
The discount rate goes up, and the present value of those future earnings comes down.
you got it. Plus, a lot of these tech stocks had already run up quite a bit. So when the Fed news wasn't unambiguously positive, it was a trigger for some profit-taking.
Okay, that makes sense.
Yeah.
So most tech is facing these headwinds because of the Fed's hawkish cut, which makes Rigetti.
Rigetti soaring today really stand out. It's a genuine anomaly in this environment.
It really is striking. It's almost like quantum is operating on a different economic frequency right now. This isn't just a blip. It's a real shift in sentiment for mainstream tech,
Absolutely.
which, as you said, makes Rigetti's surge today incredibly noteworthy.
Mm.
So let's get to it. What was the specific direct trigger? What allowed RGTI to completely buck this trend and hit that all-time high? This is where it gets really interesting.
Okay, yeah. The direct cause, the immediate catalyst for Rigetti's big jump today is a new contract, a 3-year deal.
From who and how much?
It's from the Air Force Research Laboratory, the AFRL. and it's valued at $5.8 million.
$5.8 million from AFRL. Okay, that sounds significant.
It definitely moved the needle. The market reacted instantly. RGTI shares jumped to $25.31. It's a 15.1% increase today, hitting that all-time high we mentioned. Even earlier in the day, it was already up over 11%. So yeah, decisive reaction.
A nearly $6 million vote of confidence from the Air Force Research Lab. Can you break down what this contract is actually for? What are they tasking Rigetti to do?
Right. So this isn't just, throwing money at research. It's pretty strategic. The contract's purpose is specifically to advance superconducting quantum networking.
Quantum networking, like
Yeah.
connecting quantum computers together.
Exactly. You're essentially talking about developing the foundational building blocks, the infrastructure for a potential future quantum internet.
Wow. And are they doing this alone?
No, and that's another key piece. They're collaborating with a company called QFox. They're a Dutch R&D firm, and they specialize in something called quantum frequency conversion technology.
Okay, superconducting quantum networking. Quantum frequency conversion. Sounds pretty complex. Can you simplify that for us? What problem are Rigetti and QFox solving together here?
Yeah, let's break it down. So Rigetti's main tech, their quantum computers, use superconducting qubits. These typically work with microwave signals. Think of those as the internal language of their machines.
Okay, microwaves inside the computer.
Right. But if you want to send quantum information over long distances, like through fiber optic cables, the backbone of our current internet, and likely any future quantum 1 microwaves aren't great, they lose information too easily over distance. You really want to use optical photons, light particles.
Ah, so you need to translate between microwaves and light.
Precisely, and that's the challenge. Rigetti brings its superconducting qubit tech, the source of the quantum information. QPOX brings the critical transducers. Think of them as highly specialized translators.
Translators for quantum signal.
Exactly. Devices that can convert those delicate single microwave photons into optical photons and potentially back again without destroying the quantum information. That's incredibly hard to do.
So the goal is to link up multiple quantum processors.
Yes, to enable them to work together collaboratively, like a distributed computing network. Imagine building a quantum supercomputer not from one giant chip, but by networking many powerful specialized quantum chips together. It's similar to how classical high-performance computing clusters work today.
That sounds like a major step towards practical, large-scale quantum computing.
It really is. And the AFRL's involvement signals how serious the government is about this. Their principal research physicist, Matt LaHaye, actually made a statement about it.
Oh, what did he say?
He said, and I'm quoting roughly here, that AFRL is actively pursuing the development of heterogeneous quantum interconnects for integrating matter-based quantum technologies, including superconducting qubits within our recently established telecom-based quantum local area networks, QLANs, in Rome, NY.
Okay, that's a mouthful, but the core message seems clear.
Right. It sounds technical, but what Dr. LaHaye is basically saying is the Air Force isn't just funding research. They are actively building the infrastructure, the quantum local networks, to connect different types of quantum devices. And Rigetti's superconducting approach, linked via this networking tech, is a key part of their plan right now, specifically at their facility in Rome, New York.
So this government funding isn't just cash. It's actively shaping the architecture of future quantum systems.
That's the real insight here, I think. It's validation, yes, but it's also potentially giving Rigetti a crucial role, maybe even a first-mover advantage, in defining how these future networks get built.
That's a significant point. And it makes you think, is this Rigetti contract part of a bigger picture? Because it feels like the whole quantum computing space is buzzing right now.
It really does.
I mean, we've seen other players like IonQ, ticker IONQ, and D-Wave Quantum QBTS. They've also had these huge rallies lately, what some people are calling explosive.
Yeah, the whole sector's got momentum.
And IonQ, for instance, they just acquired Oxford Ionics, another quantum company, and signed an agreement, OU, with the Department of Energy about using quantum tech in space, of all places.
Right, space applications. It shows the broadening scope.
So what's going on across the whole sector? Are we seeing a fundamental shift here? Is quantum finally moving out of the lab?
I think that's a fair assessment. You're absolutely right to zoom out. The quantum computing sector is moving, and pretty rapidly, towards commercialization. It's being fueled by a combination of things.
Like the tech breakthroughs.
Exactly. Major technical milestones are being hit. Plus, Expanding government support like this AFRL contract for Rigetti, that's crucial validation and funding. And you're also seeing growing interest from institutional investors. They're starting to see the long-term potential.
It feels different than maybe a few years ago.
It does. And if we try to connect this to the bigger picture, think about the market size. Even with these massive individual start gains we're seeing in companies like Rigetti and IonQ, the combined market cap of all the publicly traded quantum computing names is still, relatively tiny.
How penny are you talking?
Roughly in the ballpark of, say, $35 to $40 billion. Maybe a bit more now with today's moves, but still in that range.
Okay, $35–40 billion. That sounds like a lot, but how does it stack up against other emerging tech sectors? Give us some perspective.
Okay, good comparison point. Think about the EV sector, electric vehicles, but let's exclude Tesla for a moment, just companies like Rivian, Lucid, etc. That group is currently valued somewhere around $70 to $80 billion.
So quantum is about half the size of the non-Tesla EV market right now.
Roughly, yeah. And think back to the peak EV hype a couple of years ago. Individual companies like Rivian at its absolute peak were briefly valued way higher, maybe $150 billion just on their own.
Wow, okay, so quantum is still very early days in terms of market valuation compared to where EVs got to.
Very early innings, and this comparison isn't just about being early. It hints at the potential scale. We're talking about a technology that could fundamentally change computation itself across many industries. So the insight isn't just that the market cap is small, it's that it signals a potentially exponential growth curve ahead, not just linear.
A whole new paradigm.
Exactly. Which means even news that seems somewhat modest, like a $5.8 million contract, can have these outsized ripple effects in a sector poised for such a massive shift. The market is starting to see, I think, more legitimacy and practicality, as you mentioned IonQ's CEO Niccolo De Masi talking about secure communications applications.
Right, the shift from pure theory to actual uses.
That's the key transition. Seeing those practical applications is what draws in broader investment and moves things towards real commercial viability.
Okay, that context is super helpful. Let's bring it back to Rigetti specifically then. We know about the contract, we know about the broader sector excitement. What about Rigetti's own fundamentals, their tech approach?
Right, good question. So Rigetti's core technology is based on superconducting qubits, as we mentioned. They also have this proprietary architecture they call chiplet-based.
Chiplets, like Legos for quantum chips.
That's a great way to think about it. Building larger, more powerful systems by connecting smaller, specialized chips. Their current system, the Cepheus 136Q, they note, is the industry's largest multi-chip quantum computer. And critically, they report achieving a median 2-qubit gate fidelity of 99.5%.
99.5% fidelity. That sounds high. What does that number actually mean in practical terms? Why is it important?
It's incredibly important. Fidelity is basically the accuracy rate for performing quantum operations, or gates. Quantum states are extremely fragile, prone to errors from noise and decoherence. So having high fidelity means your calculations are much more likely to be correct. 99.5% is a very respectable number in the superconducting world, crucial for running complex algorithms without errors overwhelming the result. It speaks to the quality of their engineering.
And what's their roadmap look like? Where are they headed?
They're ambitious. Their public roadmap targets getting a system with over 100 qubits running by the end of this year, 2025. And they have a pathway laid out to get to 1,000 plus qubits within the next 4 years. So, aggressive scaling plans.
And financially, are they stable?
On the surface, yes. They maintain a strong balance sheet. Reports indicate they have over $570 million in cash and, significantly, no debt. That's a solid cushion, especially for a company still heavily in the R&D phase.
Okay, so strong tech foundation, high fidelity, ambitious roadmap, good cash position. That all sounds very positive. But, this raises the obvious question, especially with the stock price where it is today. Are there any potential headwinds, any red flags we should be aware of?
Absolutely. It's crucial to maintain a balanced perspective, especially when you see a surge like today's. While Rigetti's stock is flying, it is worth noting that some valuation models, like the one used by Guter Focus, for instance, currently classify RGTI as significantly overvalued.
Significantly overvalued. By how much?
Well, their model calculates a GF value of around 44 cents per share compared to the current price near $25. Now look, these intrinsic value models are just one tool. They have limitations, especially for pre-revenue tech companies.
But it's a pretty stark difference.
It is. It's a data point you can't ignore. And there are other financial metrics that give a bit of a mixed picture, too.
Like what?
Well, their Piotrowski F-score is currently 3. That's on a scale of 0 to 9, and a lower score, like 3, often suggests areas for improvement in uh, business operation efficiency, maybe cash flow generation or asset utilization.
Okay, so maybe not running as efficiently as it could be?
That's one interpretation, yeah. And then there's something called the Benish M score. Rigetti's is 58.86. This is a statistical model designed to check for potential earnings manipulation or aggressive accounting. A score like that doesn't prove anything definitively, let me be clear.
But it raises a flag.
It raises a flag that sophisticated investors would certainly notice and probably dig into further. It suggests a higher probability, statistically speaking. Again, it's complex. These are just indicators. And to balance that, they do have a very strong Altman Z-score of 47.8, which suggests very low bankruptcy risk based on traditional financial strength measures.
So strong balance sheet, low bankruptcy risk, but maybe some questions around operational efficiency and accounting flags, plus a potentially stretched valuation according to some models. A complex picture.
Very complex. Not unusual for this kind of high-growth, pre-commercialization tech company, but definitely things to be aware of.
What about insider activity? Anything happening there, especially with the stock price hitting new highs?
Yes, that's another crucial nuance to layer in. There has been some recent insider selling. Specifically, a director, Clifton Michael S., disposed of 100,000 warrants yesterday, September 17th.
Warrants, not shares. And yesterday.
Correct. Warrants with an $11.50 strike price. Now, the important context here is that this was done under a Rule 10b5-1 trading plan.
The pre-scheduled plan.
Exactly. This plan was adopted way back in March 2025. So it wasn't a spontaneous decision made yesterday in reaction to the price jump or the contract news. It was pre-planned.
Okay, that context matters. It wasn't an insider seeing the price and immediately deciding to sell.
Correct. However, it is still a disposition of derivative securities by an insider. Even though it was pre-scheduled, seeing a director dispose of warrants linked to 100,000 shares, especially when the stock is at an all-time high, can still be interpreted by some in the market.
As maybe taking some chips off the table.
Potentially. Some might see it as an insider choosing to lock in gains via a pre-planned mechanism, rather than holding everything for even greater future appreciation. It's subtle, but it adds to the overall picture of signals investors are weighing.
And how does Rigetti's business model, relying on these contracts, compare to peers?
That's another point of contrast. Rigetti at the moment seems primarily reliant on these, you could say, one-off government and research contracts, like the AFRL one, which are great validation, but maybe less predictable long-term revenue. Compare that to a company like IonQ, which has been actively pursuing a more diversified global commerce expansion strategy, trying to sign up enterprise clients across different industries.
So different approaches to market building right now.
Different approaches, yeah. Something else to consider when you're looking at the long-term potential and revenue predictability.
Okay, this has been incredibly insightful. So pulling it all together, what does this all mean for you, our listener, trying to make sense of this dynamic market and Rigetti's big day?
Well, I think today's deep dive really highlights this complex interplay, doesn't it? You've got a specific high-profile contract win for Rigetti, clear positive news.
Like the AFRL deal.
Then you've got the broader excitement around the entire quantum sector, this feeling that it's really starting to move towards commercial reality.
Which is lifting multiple boats.
Exactly. But all of that is happening against this backdrop of tricky macroeconomic trends. The Fed's hawkish cut, which is putting pressure on most other tech stocks. It's a fascinating mix.
So the surge in Rigetti stock today.
It's definitely a clear signal, I think, of growing investor confidence in the commercial potential of quantum networking specifically, especially with that government backing from AFRL. It shows we're moving beyond just theory.
But with caveats.
But with big caveats. It's also a stark reminder, isn't it, that this whole quantum computing space is still highly speculative. It's going to be volatile. Technical breakthroughs and partnerships like Rigetti's with Q4X are super exciting, no doubt.
Yeah, you can feel the potential.
You can. But you have to weigh that excitement against factors like, current valuations, are they stretched? Against business efficiency metrics, how well is the company operating? And even against things like insider transactions, even pre-planned ones, they all add layers of complexity.
It's not just about the cool science.
Not at all. It's about navigating this blend of genuinely groundbreaking innovation and, frankly, intense market speculation. You need a discerning eye.
That leaves us with a really interesting thought to ponder. As you, our listener, navigate this ever-shifting landscape of emerging technologies like quantum. How do you weigh that tangible excitement? The excitement of a new government contract, the promise of a technological revolution.
Against those broader market sentiments, maybe an overvalued tag from some analysts, or even seeing planned insider selling.
Exactly. What combination of those signals truly informs your understanding of where a company like Rigetti might be headed long term? It's a deep question for a deep dive.
And hopefully we've given you some new tools and perspectives to think about as you answer it for yourself.